What's going on, everyone? My name is Nicholas Merton here at DataDash, and today is May 7th of 2019. Well, folks, I hope you are having a fantastic day wherever you are. And today we're going to be focusing in on really getting a picture as to where markets are going over the next few days, because we're getting very close to the level of 6,000 for Bitcoin. Along with that as well, we've got some interesting news coming in the pipeline in regards to Fidelity and its institutional services for trading Bitcoin and possibly other cryptocurrencies. So we've got a few things to discuss today. We're really going to be diving into price. Without further ado, let's go ahead and dive into the video right after our quick sponsor. Our sponsor for this episode is Blade. Smart people use ad blockers, but smart crypto enthusiasts, they use Blade. Blade is a Chrome browser extension that protects your privacy and rewards you in crypto for every ad you see. And don't worry about tipping, Blade automatically rewards all publishers. Seems too good to be true? Find out more about how you can get Blade and get paid at blade.software. Find the link in the description down below. All right, everyone, so taking a look across the board, cryptocurrency markets are in the green at the moment. This is due to the fact that we have Bitcoin testing up towards around 59 to 59.50. And again, I'm taking the rates off of exchanges that aren't Bitfinex and don't have a bunch of wash trading and fake volume. This is actual substantial exchanges. And altcoins have been following off of this real gain in price action, so it's good to see. Not to mention as well, one of the other leaders that's really been at the top here over the last 24 hours has been Ethereum. So we're starting to get some of the larger cryptocurrencies leading in this market with some real volume again coming in to buy at these levels. And again, I think some people are speculating off a potential breakout through 6,000. That's something I'm going to be talking about when we go to the video. I don't think we're going to have a serious breakout or a rally going through 6,000, but give me some time to explain, and I'll be sure to try and make it as clear as possible. Going on, though, in regards to market cap, I'm going to go ahead and shrink the last quarter here. We can start to see that we've started to break out above some of the ranges of resistance around 185 billion. Again, this is really where we were setting up the top previously. We got back above there here in early May and have started to climb even higher, hopefully going towards around 200 billion. I think that's where we're going to probably stop out. And this is going to go into what I hope to explain in regards to Bitcoin. And Bitcoin dominance, again, continuing to climb around 55.8%. Again, I think it's going right up here to 57% at the previous top, or roughly around the same range. Now, why do I believe that we're going to see Bitcoin dominance at the same range that we saw in the peak in September? And why do I also believe that we're going to have a fake breakout at 6,000? Okay, so I've been calling, guys, I'm not saying I called it, but I've been saying that we're likely going to see 6,000 retested ever since we've had not only, obviously 2 consecutive higher lows here in this case for Bitcoin. And you can even include these if you really wanted to, a variety of higher lows here for Bitcoin, but also the breakout with the substantial volume that came in. It was setting up the environment, and this was something I tried to really inch towards people, that when you see that actual substantial volume come in a market that's silent, this shows that there's pressure in OTC markets, that they're not getting their orders filled, that they're just going to pay the slippage on price. It means that Bitcoin's cheap in comparative into the eyes of the buy side and sell side. And when you're already up this high, there's no serious range resistance, maybe outside of these few candles here. It was pretty much just a straight few days of sell-off. It's likely that you're going to come back to that range and test that big even, right? Now, we have on our mind that it's 6,000. It's a big psychological level. It's a big even number, and it did play a very critical role for Bitcoin for an entire year. But as much as it's going to still, I think, have a weight down on Bitcoin, and that we're not going to see a serious rally just yet, as much as I would like that, the major thing that I see happening is that we're probably going to have a little bit of price action, even outside of Bitfinex, on exchanges like Coinbase and Kraken and Bitstamp and Gemini, and basically the real fiat exchanges and stuff that are actually doing real volume, things of that sort. I even believe we could possibly get above 6,000. Again, you'd have to check the order books for these exchanges. I'm not getting any right now for Coinbase because I don't think they share it. But again, you'd have to see, just take a look at the order books and really determine for yourself if you see it happening. But I think we're likely going to get around to 61, 61.50, something above there that makes people go, oh my gosh, the market's breaking out. I missed out, because it just simply creeped up above that even level. And I can tell you all, the people who lead these markets, they know people are looking for stuff like that. They know they can pull people into FOMO. And in this case, they're going to start dumping at that level just to pinch a few extra $100 off the market, right? That's what some of these players do. To them, it can be millions of dollars. for me personally, I would say that this is the range here around 5,900 that I'm starting to take short-term profits. Now, why am I taking those? Well, because with how dramatically the losses came in here through November and December, I'm definitely thinking that, 6,000 being a huge level of resistance, this isn't going to climb much further. My risk to reward ratio at this point, not too good. In fact, I'd just be possibly risking a lot of the profits that I've made since the end of 2018, or at least recouping some of those losses. In that case, I could reincur them again. So what I want to do is lock that in, see how it holds at 6,000, and really, if we start to make 6,000 support, I consider getting back in. But you're not going to probably see this rally that much because the RSI is overextended if you take a look at it. Not to mention, prices practically, I don't think anyone's really noticing this, we're close in this case to practically doubling price. So if we go to 6,200, we will have 100%, we will have a 100% return off the lows here, practically speaking. Like, that's pretty substantial. And that usually does call for a correction, especially when you're still being held down around by this resistance range, which was support. And we're still not in a market, guys, where I believe we can just have an absolute full-on rally just yet. And I hate to say that, but I'm just being realistic. I don't want to sell you guys false hopes. But that's just my perspective. So you all have to do what you want. What I still think is going to happen, whether we get shot down exactly at 6,000 or if we climb a little bit above there and get shot down, is eventually we're going to break through both of these lines here. The line of resistance and what was even the line of support might hold here for a little while, but eventually we're going to basically come down to this line here at 4,200, which was resistance. We're going to turn it to support, and we're going to have lowering highs here until we triple bottom, not only in the sense of the lows here we're setting on 4,200, so we'll set up maybe a low here, low here, and low here. I'll go ahead and just draw it just to show you guys what I mean. What you'd eventually have again is, after it's chopped up here for a while, a breakdown, say to 4,200, you have a new high, or a little like a relative high here, go back down to 4,200, lower high there, and then something like this where we'd line up with the two previous substantial lows here on this blue line. And that would be right sometime either in the late summer or in early September. That's what I'm looking for the next few months. It seems practical because it would honestly be the most bullish setup, and I think one of the most confident signs for markets to move higher, because you're setting a triple bottom on previous resistance that held Bitcoin down for a good few months there in the first quarter. Well, really, if you're including one of the previous months of 2018, pretty much for a 3-month period from December to February. But along with that, you'd be lining up with these two previous lows, right? And that's really good to see, especially, again, on previous resistance. So that's what I'm still looking for. I'm starting to lock in and consolidate profits. I've got an ETH position that I'm thinking of probably closing today, guys. We'll see. I think ETH's got possibly one more day to move with this rally to 6,100, but do I really want to risk it? I don't know. I'm thinking about just keeping a tight stop loss in that case, and really, I'll feel comfortable with whatever happens. So going on, speaking about Ethereum, let's go ahead and take a look at some of these altcoins, seeing as we're focusing in on price today. Again, Ethereum, though it is looking good, I'm noticing the wicks are quite tall on these candles, and it's reminding me again of what I saw over here. Now, do I believe we could possibly get up here to around the 180, 185 range? Sure, but again, it's in my opinion, what I'm thinking about doing after I probably get the video set up and stuff is setting up like a relatively tight stop loss or something like that, just to lock in profits if things start to head south and this turns into a red candle. Would love to lock in the gains and stuff that have incurred on Ethereum. It's gone up a pretty decent amount over the last few months. So don't want to miss out on stuff like that. You don't want to get too greedy for that. Oh, I want the extra $5 per Ethereum, right? Now, going on to take a look at XRP, I've been looking at Coinbase for all these. I'm going to actually take a look at Bitstamp. I do like to see that on the USD fashion that this is holding nice, but I really do think you're going to see this come back down to 27 cents, which is previous low here, previous low here, previous low here, and also have a chance as well to go down to 25 cents. When we get it down to that range, the risk to reward for me for XRP personally feels really good, but I'm not, getting into it eagerly right now around 30 cents, unless I really start to see momentum pick up and volume come in as well. So remaining patient on some of the momentum plays. I know a lot of people, in fact, I just actually did a recording with Tone Vase that should be up probably tomorrow. I think that's when I'm going to get it up. But we basically just talked about how, as much as I know Tones, he's a maximalist on Bitcoin, but I admire him for it. The major thing that he is just standing by is that, we're starting to see a lot less momentum come in. One that I would actually say that actually proves to that is XLM USD. So like Stellar Lumens, this is one, actually I will get it on the Bitcoin chart here, have just started to really lose out in the Bitcoin comparative here. They're just continuing to dump right now. And I've been watching this one for a while, but its Bitcoin comparative has just made me not interested in it right now. So I'm not making any serious moves. I am watching for this to start selling off exponentially, really start forming a falling knife, then build some support, and possibly buy on a dip. But, Bitcoin dominance has remained strong, guys. We'll have to see if there can be a change in the trend in that matter. Alrighty. So we've done about price, guys. Let's go ahead and talk about the news with Fidelity. So this is something that kind of leaked out over the last few hours, and this has to do with, it came through a Bloomberg report that basically talked about how Fidelity, from an anonymous source, is ready to start trading its Bitcoin, starting to offer its trading services for Bitcoin and possibly other cryptocurrencies very soon down the line. So in the next few weeks. So is this really good for Bitcoin, and is this a catalyst that could carry Bitcoin forward as we're approaching the $6,000 range for Bitcoin? I'll be honest, guys, as much as this is really exciting, I'll tell you two things. The first thing is that this isn't as substantial, again, as an ETF. This isn't as substantial as getting this out into a financial product that everyone can use, right? That's one thing we need to take into account, because this is just for Fidelity clients. But the second thing as well is that this is not just for all Fidelity clients right away. It's going to be for a few institutional investors. So they have about, I think they mentioned 400 institutional investors they did in a survey here, but it's even shorter than that. They basically are just going to be opening up the service to a select set of clients they're going to be supporting on the platform initially. Now this is good, but this isn't probably going to be enough substantial volume for this to really carry forward to have any effect on Bitcoin as a cryptocurrency in regards to price. It's cool that people will be able to trade the service, or a few people will for the start, but until you start opening this up to a lot of people, it's not going to be that substantial. And not to mention as well, they're also going to be offering similar service to OTC offerings, things like that, for larger sums. Now, what's my other second point to this? So it's a select group of institutional investors, but the second thing as well is that, as we mentioned earlier, the big point that I can tell you every single institution is going to take a look at when they take a look at the Bitcoin chart, is they're going to notice, wait a minute, Bitcoin's up here at, like, let's say 6,000 by the time that it's trading, if it happens sooner rather than later. They're going to look at this and go, oh my gosh, this is like doubled in the past few months. Do I really want to buy this right now? Does it have the substantial, ability to get past this resistance? A lot of institutional traders use naked trading. They use basically support and resistance. And I think that they're, going to look at the volume in the market and not think it's ready just yet. Again, that's just my opinion breaking off of this, guys. We don't have too much information to work with on this, but I do like to see that at least 22% of over the 400 institutional investors already have access to some crypto, and that I think they said half were sympathetic to including it in their portfolio, basically meaning that they'd be open to it. So that's good to see. I'm interested in this. I'm glad to see Fidelity pushing the envelope. I think the only way you're going to get positive crypto regulation is by these companies kind of pushing the envelope forward and trying to, establish a foundation for cryptocurrencies to actually operate. And what I hate to say is a much more mature environment. And what I mean by that is that as much as I dislike Wall Street, as much as I dislike a lot of the traditional financial sector, we need companies like Coinbase, like Gemini, that are actually operating at least in a proper regulated framework. The next ideal step would be that we can actually trade cryptocurrencies and interact with them without the need for brokerages, and actually be able to have the scalability where we can do things and settle things on chain in our own wallets, and it not be difficult and it not be insecure. That's what I'm interested in. So there are some ways to do it, but it's a little bit more complicated for the average kind of Joe in that case. That's not meant to be an insult, but it's just like, you don't see most people doing that. They opt in for Coinbase. They want something convenient, right? So one thing, one thing we got to talk about is there's been this quote coming out about shutting down cryptocurrencies from a Nobel Prize winner. This is an economist named Joseph Stiglitz. I think that's how you pronounce his name. I don't really care to pronounce his name because he obviously didn't care to really do his research. So, despite the growing popularity of cryptocurrencies, there are some people, experts in the fields, who believe that cryptocurrencies are not good enough and should be banned. The latest person to join this school of thought is Joseph Eugene Stiglitz, a recipient of the 2001 Nobel Prize in Economics and a professor at Columbia University. In a video published by CNBC on May 6, Stiglitz said that cryptocurrencies should be shut down. He said, "I actually think we should shut down the cryptocurrencies." I love it. The funny part about the quote is that he makes it sound as if there's an opportunity to shut them down. Yep. Like, look, guys, you can ban cryptocurrencies all you want, but you're not going to stop people from mining if that's what your concern is here. But in his case, what his concern is actually not the environmental concern, which again I think is completely debatable, and you guys can have a concern about that. But there's two things in the fact of the matter. You can't sadly shut down mining. People are just going to do it so long as there's a country that will allow them to mine, or a variety of countries that will provide that power. And there's business involved in it, so a lot of countries won't stop it. But along with that, the major thing that they mentioned here is that this is being used for illicit transactions due to their anonymous nature. Bitcoin itself is where the vast majority of these transactions happen. Okay, I'll be fair, I used to actually make a claim that I realized was actually a little bit off, and that was that Monero is used for most of dark web transactions. It's still Bitcoin. Bitcoin's not anonymous. Get it through your head, economist. Do your research. It is not anonymous. It could possibly have Mimblewimble or some other form of technology implemented down the road. We could implement something down the lines of zero knowledge, things that do make Bitcoin anonymous or private to some degree. But the fact of the matter is, it is not anonymous. How does someone like this, who has a Nobel Prize, not go through the process of doing their research, and along with that get featured on CNBC? Like, I don't get stuff like this, guys. That's pretty much the sole chunk of the article there, guys. There's not too much outside of that. Wow, I mean, it's really disheartening to see. People I know a lot of Nobel Prize winners are very smart individuals, done some really interesting stuff, but that's just pretty sad. So, guys, what do you all think? Do we need to make Bitcoin anonymous to fill these fears, and the idea that you should have some sense of privacy and that not every single thing that you do is a criminal action? I mean, what do you guys think about it? I'd like to know. But anyways, that's going to be it for the video today, guys. I got to go do some anonymous things with my anonymous Bitcoin, aka wink wink criminal activity. And outside of that, guys, let me know what you just want to see in the comments down below. But until the next video, I will see you all in the next one. Stay tuned.